In the final quarter of 2013, Spain's economy grew at the fastest pace in almost 6 years. Now, this is the latest in a series of economic signals that have boosted confidence in the Spanish economy and produced an increase in foreign investor interest. I'm joined by Ricard Torne, Senior Economist at Focus Economics in Barcelona. So Ricard, what sort of market reaction has this had? And does this data provide you with some hope that we will see more jobs created this year?
As you mentioned, in Q4, GDP expanded 0.3% over the previous quarter, which marks the largest increase since Q1 2008. It was, of course, above the 0.1% increase recorded in Q2, and surprised markets on the upside. We had been expecting growth to rise 0.2% only. So it's a good news. And expansion is always a good news, but we need stronger figures to spur job creation. According to some analysts, the economy has to grow at least 1.1% to create employment, although that it seems more reasonable to talk about rates of 2 and 3%. About the unemployment, registered jobless fell by more than 100,000 people in December. However, this partially reflects seasonal effects related to Christmas holidays, migrant workers returning to their countries, and people giving up looking for work. We think that we have to wait until 23rd January when the Statistical Institute will release data for the entire Q4 on people who are really looking for a job rather than people who are registered only in the government's unemployment offices. The quarterly survey, which is more reliable, showed an unemployment rate of 26% in the third quarter. We expect the unemployment rate to have remained broadly stable in Q4. For the whole year 2014, we expect unemployment to decline only marginally to probably slightly below 26%. That's a bad news for us. And we expect that unemployment will fall below 25% probably by 2016-17. For us, it's also important to notice that the risk premium between the Spanish 10-year government bond and the German bond narrowed to only 200 points, the lowest mark since May 2011. Moreover, Spain saw the 5-year borrowing cost fall to a record low early this year. In our opinion, all these facts suggest a cautious, optimistic outlook for this year.
And Ricard, what are your views on today's CPI data for Spain?
Well, inflation in December was steady at November, 0.3%. Mainly because an increase in fuel prices helped to offset a decline in prices for leisure and cultural activities. For this year, we expect that inflation will remain contained, resulting in an average of 0.7%. For 2015, we see that inflation may rise to 1.2% only.
Looking ahead for this year, what are your growth forecasts and what are the main challenges facing Spain?
So even though analysts are more optimistic about Spain's economic prospects, we have to be cautious because unemployment will remain high for some time, and it is dragging the potential contribution to growth from domestic demand. Conversely, our panelists expect that external sector will continue to be the only source of growth in 2014. In this regard, it's worth to say that the current account will likely reflect the first surplus since 1986, a record reaching 1.2% of GDP in 2013. For this year, we expect the current account surplus to widen to around 2.0% of GDP. So, about GDP growth, we expect that GDP will expand 0.7% this year, before accelerating to a 1.2% growth in 2015. Another challenge for this year is going to be the real estate sector. Home sales and housing prices will continue to decline, but at a slower pace. Finally, in the political arena, the referendum on Catalonia's independence, expected to be held in November, could pose additional risk to Spain's outlook. Uncertainty about the consequences of secession could worry investors. In particular, investors will likely want to know what is going to happen with the massive debt burden that currently holds Spain. In this regard, the UK Treasury initiative to guarantee all the Britain's debt, even if Scotland decides to leave the UK, is a step in the right direction.
Ricard, thank you very much for that. Well, viewers, that is all for right now, but join me again tomorrow as I will be bringing you the press review. See you then.